If you're looking for the most up-to-date information on Florida's real estate market, you've come to the right place. Today, we've interviewed Lee Brickey, one of the top realtors here in Florida. So stay tuned.
So, do you think people should be looking to buy a home here in 2023? Housing prices are really inflated still. I don't know if there's going to be, if I don't see them going down with rates as high as they are. Should people wait till 2024 to buy a house?
I'm getting that question all the time, Lee. I just got off the phone with someone about an hour ago. Exact same question. They're planning to retire from Connecticut, move down here in 5 years, and like, hey, have we missed the boat? Are prices going to come further down, or are they going to go up? Now, this is the thing. It's either interest rates or prices, right? Looking at what's going on right now, rates are higher, but we know they're going to come down.
Right.
And so what we're seeing right now is that the way that interacts is, when rates go back down, then prices are going to go back up. The question to ask yourself is compared to what? I mean, if you're coming from New York, New Jersey, Connecticut, Massachusetts, California, prices are still relatively low.
Depending on where you're going now, though. But
right, depending where you're going.
Miami now is the most expensive place to live in the United States.
Right.
I mean, people in Beverly Hills, billionaires living on the ocean in California are complaining about the prices in Miami.
Well, a lot of wealthy people were moving especially from New York down to Miami. That was a kind of a vacation spot for New Yorkers for years and years. And so they're familiar with it. Tax benefits, obviously no income tax.
Well, it's all the hedge funds and brokerages and tech companies and crypto companies there.
It's just been a great migration out of New York City, especially to Miami. But, there's parts of Florida that are still ripe for appreciation. So I think you have to pick your spots. I guess that would be my answer is I wouldn't go to Broward or Miami assuming that you're going to see a great deal of appreciation in the next, say, 3 or 4 years. But beyond that, as rates come back down, we're preparing for a refi boom in 2025 is what we're preparing for right now. And when that happens, when rates come back down, you're not going to stop people from moving from Florida. I think, I grew up in the Midwest, and I'll tell you, everyone in the Midwest dreams of moving to Florida when they retire. Of course, that same is true of the Eastern Seaboard, so I just don't see the migration pattern changing anytime soon.
What I'm seeing on the ground right now is the lower end properties in Palm Beach County and the Treasure Coast, those are selling with multiple offers. The mid-range stuff, $600, $700, $800, $900 million, $2 million. That stuff is sitting. The stuff in Port St. Lucie that's $500,000, $600,000, $700,000. That's sitting unless it's new construction. Now, new construction just flying off the shelf, but resales. I think in markets where there's a lot of new construction, that new construction at the same price is hurting that market. We're having some issues with some of our listings. We put something on the market for $300,000 or $400,000, and within a couple of days, you've got 3 or 4 offers on it. Definitely, right now, you have a lot of new buyers in the market. A lot of these are FHA deals, and they're new first-time buyers, or they're migrating from South Florida to the Port St. Lucie market. They're taking advantage of the high rates right now, getting into these homes without having crazy bidding wars. We're seeing some bidding wars, but they're not more. I wouldn't say it's much as pricing as if people are paying the price. They're not really going above it. Mostly you're choosing who's purchasing the home now on the merits of how the offer is written.
Right.
Is it an FHA? Is it VA? Is it a conventional? Who's the mortgage company? I mean, there's a gap in the market. And then then you go from that 6, 7, 800 million, 2 million, and then you get up into 10 million. And that stuff is the $10 million and up stuff. That stuff's selling like crazy because all these people are moving here that are hedge funds guys. And I mean, I heard that there's actual in Miami right now, they don't have enough schools to put the kids in. So they're ending up doing endowments for these schools so they can get their kids into a private school. So they give them $10 million, or $20 million to get their kid in a school. So it's crazy what's going on here. So let's talk a little bit about where these rates are going, because I think that's keeping a lot of people on the sidelines right now. Certain markets you're seeing housing prices really dropping, but here in Florida, It's not. We haven't seen housing prices go down really much at all, if any. I mean, it's
Right.
continued on an upward scale. So, where do you see these rates going? Because we just hit 6.79
Mhm.
today. It's the highest since November. The article says growing fears of another Fed interest rate hike and debt ceiling talks push the average 30-year rate loan closer to 7%. And last week it was 6.57%. So
Mhm.
what's going on here?
The debt ceiling conversation, kind of stole the headlines there for about a week or so, and that's been going on for several months actually. But it really started to heat up. Treasury head Janet Yellen, was basically saying, "Hey, the deadline's June 1st," and then she moved it out to June 5th. The U.S. would default on their loans. That is a serious conversation. What happens is that if that were to occur, and by the way, they're never going to allow that to occur.
Well,
Okay.
they passed it today through the House and Senate.
Right.
It's
Exactly.
going to the president's desk. He's going to sign it.
We can't run the risk of losing the status of the world's reserve currency, for example. That would be tragic. When you lose your credit rating as a nation, what happens is you're borrowing at higher rates when you're selling those treasury bills. In other words, the debt that we offer for sale, the rates go up because the downgrade in the rating. Then you have everything in the U.S. going with it. In other words, it would drag interest rates up with mortgages as well, and that's what we saw. Really, the last, I'd say the last month or so, we've seen pressure on interest rates as far as them going up because of the additional risk that it was perceived risk, the Treasury situation, the U.S. debt. Since that conversation looked like it was turning the corner, rates have come down the last 4 or 5 days in a row. So we're looking better than we were 4 or 5 days ago, and we're down, right around that 6.7. We were over 7 briefly,
Right.
late last week. It's an improvement actually at 6.79. So it was a little worse in that midweek.
And where do you see things going? I mean,
Well,
there's mixed economic news. We're seeing retail falling off, and we're seeing manufacturing now falling off. Other businesses doing very, very well right now. I think 10 million jobs available in the United States. Still a lot of jobs available out there. If you lost your job, you can go get another one. People seem to still have cash. I know that for a lot of the middle class and the poor right now, those people are just getting crushed. There's still enough cash in the market right now to keep it going. So do you feel like rates will come down even though we're still seeing this happening with job market continuing to stay strong?
so much cash was infused into the system during COVID, right? I mean, so much cash, and employers receiving the PPP money, and then you've got the EIDL money, the loans and stuff. So there's a tremendous inflow of cash that way. We're going to see where that inflation it causes inflation. If you're introducing money to the economy, that's what causes inflation. It's like throwing gasoline on the fire. And so that's what we were seeing over the last year and a half. To tamper that, what's happened was they raised the interest rates and a tighter monetary policy to bring inflation down. And so all the inflation figures are showing, trending down. There's no question. Actually, we peaked out in inflation, almost 12 months ago. You're seeing it, that trend will continue. And unemployment with full employment essentially is where we're at. Is actually technically we're at 3.7%. The jobs report came out this morning at 8:30. Last month we were at 3.4% nationally, 3.7% month over month for May. That's a pretty big pop in 1 month. Some other things we saw in the jobs report, some of it doesn't make a lot of sense. You have to really go into the survey. In other words, they were expecting 180,000 new jobs created, and it came in at 339,000 new jobs created, and unemployment went from 3.4 to 3.7. It really doesn't jive because they'll do revisions, and so you kind of have to dig into it a little bit. But generally speaking, there's jobs out there, and especially, well, if you look at Florida, the unemployment figures are much lower than the national average. Florida, in particular, is enjoying a boom still as far as employment. And until they start seeing the jobs market start to crack, that gives them some fuel for, raising interest rates. However, we were at 70% chance of a hike on June 13th, the next Fed meeting. That likelihood dropped from 70% down to 25% just in the last week. That quarter point hike for the next one is pretty much off the table now.
Yeah, because this article just came out that said Floridians a bit more confident in May, meaning the consumer confidence continues to go up. And you can see on the chart that we're putting on the screen right now that it's continued to go up every month except for April, but in May it went back up. So we had a little dip. People in Florida are feeling good right now about their lives, the majority of Florida right now, because there's jobs available. I know that a lot of people will say that they don't pay enough. Depends on what field you're in and what you're doing. But I know that I'm watching some of my friends and the things they do in construction and real estate, different businesses. One of my buddies is one of the biggest fiber companies here in Florida. His income is just going through the roof, and they're putting on employees. And a lot of the people I know and that we both know are doing better than they ever have in their jobs and making more money than they've ever made, because they're in an industry where it's servicing the population. And I really believe that's where the money is right now. I mean, restaurant people, they're making six figures right now in some of these restaurants here in South Florida and the Treasure Coast.
The jobs market really, without jobs, there is no real estate market, right? I mean, it's really the number one contributing factor as far as we were talking about, as far as appreciation too. We're seeing the top of interest rates. I really believe we've already seen the top, frankly. And I think we just tapped what we saw last November because of the debt ceiling thing, but that was really an unforced error, right? I think that's something that really wasn't necessary. It was political.
Well, the stock market rebounded today.
It affects everything. Or as far as inflation, there's only so much they can do with interest rates to bring inflation down. And what they've done to this point, and by the way, there's a 8 to 12 month lag on rate hikes. And so we're just beginning to see the full effect of really, it's been 14, 15 months of rate hikes. We've got to let it ride a little bit and kind of see. And so I think that it's a highly likely now that there's going to be a pause at the next Fed meeting. And then we're going to see, continued effects of this, series of rate hikes. We're going to see mortgages are going to be ahead of that, by the way. So rates were already coming down with just the talk of a pause. If they pause, rates were going to come down even further as far as mortgages go.
Article just came out today by the Florida Realtors, and it says that Fed less likely to raise rates this month. So it seems that everything I'm hearing in the equities market is telegraphing that they don't believe the Fed's going to raise rates anymore this month. So they're pausing right now to see what happens. And I don't think it has anything to do with the housing market or anything to do with people's pocketbooks or crushing poor people or crushing the middle class. It has everything to do with these small banks. They can't afford these small banks to go out of business, and there's a lot sitting on the sidelines right now holding on for dear life because they've made bad investments and long-term investments, which they shouldn't be doing. And so a lot of these savings and loans and local banks could crack, and the Fed just can't have that.
Well, you buy a bunch of bonds that, now because rates are going up, they're hard to sell a 10-year treasury at 1% when yields are 3.64 today. It's like, what's the value of that bond now? And so the mark to market is how they evaluate their balance sheet. And so their balance sheet shows that they're basically upside down, because those valuations drop when the markets, because these wild fluctuations in rates, there's ramifications to it, right?
Right. Well, when the Fed came out last month and said that the banking system is sound, right after that on the market news, it was just one broker after the next saying this guy's lying.